is now on Stitcher. Listen to us on phone, Android, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 10th day of July, 2017. Hope you're having a great Monday wherever you are. Mondays are Mondays, you know. I suppose it depends upon who you are and what you do for a living. But statistics say that 70% of Americans, probably worldwide, but the study was done in America, 70% of Americans wake up on Monday morning with a knot in their stomach, driving to a job that they hate doing, working for people that they cannot stand, doing tasks for which they believe they are very much overqualified, underpaid, and unappreciated. Did I forget to say Happy Monday? Now what about those other 30%? How's that working out? They're stopping for coffee and a bagel, and they're whistling on their way to work, whistling while they work. Probably while they're at work, they'll get a promotion today, or called out for some kind of special honors or recognition. And who knows, there may even be a building named after them. Oh, and a VC just called and said, by the way, I realize you don't have any startups going right now, but if you should think of something, we're all in. And then there's those who drive Uber. Hi. All right. Studio A. It cracked 100. I'm sorry. I take that back. It failed to crack 118. It slammed right up against it, but it didn't crack it. So we were very thankful for that. I'm day 4 of the Odyssey here, and I was attempting to communicate with my... I beg your pardon?
I said you still don't have the AC fixed?
No. And so 4th day of the Odyssey, I'm texting with the AC guy today, because he don't do Saturdays and Sundays. I said, I texted him this morning. I said, so what's going on? Well, I'm on an install, and it's a pretty big job, and even though I've subcontracted it out, I've got to kind of watch over it, but as soon as I get it done, I'm going to get those parts. The parts he should have got on Thursday. Then I'm going to come over, and we're going to see if we can, get it going. Okay? If he doesn't get it going, well, I'm going to be polite, and I'm going to thank him for his concern, and I'm going to find an AC man. I've never had an AC guy before. Trust me, I've had an army of AC guys come to my house, but never once have I had one come and say, I can't figure out what's wrong. I mean, it's blah blah $500, or it's blah blah $500, and then about every 3 years it's blah blah $1,500. Okay, I kind of settled into that rhythm. But when a guy spends 4 hours and says, man, I'm stumped. I mean, correct me if I'm wrong, and I'm no AC guy, but you got a compressor, you got a fan, you got some switches, you got a thermostat. There's not a lot of moving parts there. Seems like you could hook up some kind of equipment and isolate, what the problem is. But anyway, enough of my problems. This puts me in the 70% group driving to work this morning. Now the 30% who are walking on sunshine, God bless them. Hey, hope you had a great weekend, spent quality time with your family. And if you cannot see the chart I have up right now, it's the S&P 500 Emini Futures. Now there's 2 ways you can do this. Go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone, follow the instructions. Where it says watch live now, click that. 30 seconds, you're good as gold. You'll be able to join the show with one-click access for the rest of the month. That means you'll immediately see the charts, immediately have access to the chat box, and that chat box is your chance to share your thoughts, ideas, and opinions with our global audience. You can take the road less traveled, which is youtube.com/CFRN. Click live in the left-hand corner, and bang, it's there. That's all you got to do. That's us working hard just for you. Let's take a look at these numbers around the world and see what kind of shape we're in today. Obviously, as you can see on my screen, Sunday night Globex open right here, 6 p.m. last night, July 9th. Now these are last week's zones, but I've hammered home so often how important the previous week zones are, especially early on in the week. It's not like they just go away and lose their power, you know, because we take one day off, which is Saturday. So what did it do? It ran from zone, almost the zone of last week. It came 3 ticks shy, and then it came right back down, overshot it by a half a candle, and now it appears to be making its way back up. Now, had it completely touched here on the up move, that would have been 7 S&P 500 E-mini points, and back down 7 plus S&P 500 E-mini points, and if it gets all the way back up, that'd be another 7 S&P 500 E-mini points. So that's 7, 14, maybe 21. We'll see. Where we fell short here, the overshoot made up for that. And so you can see that's why we do have partners who, while they have great respect for all of our tools and strategies and whatnot, they're like, man, I'm just going to trade zone to zone. That works really well for me. And I say, okay. The Dow cash market here in the US of A currently up 26 points. NASDAQ up 20 points. S&P 500 up 4.5 points. Russell 2000 negative, down 3.5 points. Now, here's what's going to be confusing for, I suppose, everybody in regards to the Russell for just a couple days. Okay, let me bring up, if I might, I think I got another chart. Yeah. Okay, here's the old Russell contract. Let me get rid of all those drawings because they're no longer relevant. Okay, we all know, or most of us know, we've tried to let you know that as of today, the Russell moves back to the Chicago Mercantile Exchange. However, when one of our partners this morning noticed how little volume there was in the new Russell contract, of which the symbol, by the way, is on DT Pro, it's RTYU7. Okay, he said, man, there's no volume on this new Russell contract. Well, there's, you know, a few contracts traded. So I popped over to the contract that's been trading on the ICE exchange, and lo and behold, they've got 48,000 contracts. So we discussed this in the live training room, and I believe what's happening is they're sort of winding it down the way they do when a contract expires. So as Michael said, probably by the end of the week, if not sooner, we will see the volume in the CME contract exceed the volume in the Russell contract, and then the Russell contract will simply fold and or fade. Hey Michael, you know that thing I was talking to you about that popped up on CNN or CNBC
Yes.
on Friday?
Yep.
You remember that?
Yes, I do remember that.
Well, take a look at your screen. Or maybe don't take a look at your screen. Holy
I'm looking.
smokes. Now, I didn't close that. Maybe I gotta open it up full screen. Yeah, there you go, see it? On the right?
On the right, on the right. Oh yeah, there it is.
Right there.
I do see it. Nice. That's a big one too.
Yeah. So, anywho, now back to the numbers. Okay, so you understand what's happening with the Russell. The volume is slowly shifting over as the week progresses. By the end of the week, if not sooner, we expect the majority of the volume to be on the new CME contract. And for those who haven't been around a long time, the Russell has always been at the CME. We were all taken by surprise when it moved to the ICE exchange. ICE did everything they could to destroy it. They started charging for data, and then they reduced the point value from $100 a point to $50 a point, and when they couldn't beat it up anymore, they sent it packing, and you know, summer's over, go back home. Okay, so now, Michael, do we know at the CME what they're doing as far as any data cost or point value?
So far, what I'm looking at here, it looks like they're just adding it in with the group.
Okay.
Because I have data here.
Now, this is the daily this is the daily chart of the Russell. Okay, let me break it down so you can actually see some candles. Okay, there you go. There's a
it's $5 a tick.
10 tick range candles right there.
Mm-hmm.
So, you know, there's some stuff going on. Now, if I kick this back to the daily volume on the day, looks like 115 contracts.
Yeah.
So I had no idea it was going to do this. Honestly, I thought it would just switch over, but
yeah, that's what I was thinking too.
Now we know. Now we know. Okay, so the Dow up 29 points, Nasdaq up 23, S&P 500 up 5, the Russell 2000 down 2. No movers, no shakers. The markets are mixed because of the Russell and the Russell alone, and that's an outlier because of all that's happening. Okay, in our commodity basket, crude oil is up 41 cents, trading 44.64 last. Now, that's an increase of almost 1%. Gold is up $2.30, trading 12.12 last. As we slide down to the Asian markets, the Nikkei closed the session up 151 points. That's 0.75%. Shanghai closed down 6, and the Hang Seng closed up 159. That is a little over half of 1%. In the European markets, we're green wall to wall. The FTSE managed to close up 19 points. The DAX closed up 57 points, and the CAC closed up 20 points. Closest thing to a mover and shaker there would be the DAX, which was up almost half of 1%. So there you have it. Asia mixed, Europe green, and here at home mixed because of the Russell. So the dollar has firm, climbing to a 2-month high versus the yen. Nasdaq up again today as tech stocks lead ahead of earnings season, and that's something you want to make note of. We are in earnings season, and it's rare on a futures chart, except for Sunday night, to ever see much of a gap open. The soybeans, you see them because they don't open until 8 p.m. And every now and then there's the rare gap, but it's not anything like stocks. With stocks, you see gaps almost daily. In earnings season, if a company reports after the bell, when the market reopens at 6 p.m. Eastern, if it's one of the big companies that reported, an Alcoa, who's always the first one out of the gate, or an Apple or a Google, you get the drift, an Oracle, it can have an impact. So we recommend that you be flat before the market closes so that you aren't subjected to overnight margins, unless you happen to be participating in some type of a swing trade, multi-day trade, and then that's a horse of a different color. Okay. Now, I want to talk to you about something really quick, then we're going to go to Michael and get the recap of everything that happened in the live training room today. Most of us saw the movie Wall Street, and some of us were unlucky enough to see Leonardo DiCaprio portray Jordan Belfort as the Wolf of Wall Street, I think he was called. I got to tell you, that was by far one of the most utterly disgusting movies that I've ever seen. We hear about gratuitous sex and gratuitous profanity. This was so over the top that I finally I had enough. And then I came back to the very end to see him get what he had coming. Because, my goodness, he had some stuff coming. But I bring all of that up to bring up something that, you know, we've always been warned about and cautioned about and said, oh, don't go there. And I'm talking about penny stocks. And I'm just going to talk for a minute because this is a show about all things Emini Futures. Okay? But something is in the wind, and I just want to give you an idea of what has happened over the years. There was a company called Concierge Technologies, NASDAQ company. It was a colorful company, to say the least, based in Redmond, Washington. The company celebrated its 20th anniversary back in 2013. And although shares soared as high as $45.80 during the height of the tech bubble in '99, they subsequently crashed along with the NASDAQ. On March 30th of 2001, CNQR traded as low as 31 cents a share. Now, at the time this little article that I'm reading was written, they had recovered, and the shares were trading at around $107, which is about a 34,400% gain from the all-time lows. Now, this CNQR, I don't know if it still trades or not. It's not a company I'm familiar with at all. I just want to take a look at it. CNQR. Yeah, I'm thinking it might have went back to zero here. Let's see. That would make what I want to say even more pertinent. CNQR stock price. Okay, here we go. No, it's trading at 128.80. Okay. Now that's after taking a nosedive all the way down to 31 cents. Another one, General Growth Properties. They were involved with malls, mall-based real estate. We know that's not going well. We've been talking about that of late, that the malls are all but, you know, shutting up and closing down. I assume they'll repurpose the buildings for something else, but nobody's going to the mall much anymore. Have you been? It's like a ghost town. Kids don't even hang out there. They hang out on their digital equipment. So, the company filed for Chapter 11 in April 2009. They hit an all-time high of 64 bucks. Then they filed for bankruptcy. But the stock wasn't worthless because the company had underlying real estate holdings. And by understanding the intricacies of a bankruptcy, Ackman's Pershing Square, yep, that Ackman, yeah, that one, the one that's after Herbalife, made a fortune on February 27, 2009, when General Growth shares hit an all-time low of 59 cents. Today, GGP is trading at around 2050, a gain of around 3,375% from the lows. Now, my previous co-host enjoyed wearing a nice pair of $200 True Religion blue jeans. Well, here's the deal, Neil. It's a pretty amazing story, and even more amazing is the fact that all of this happened over the course of 9 short years. On July 30th, 2004, True Religion shares traded as low as 67 cents. 67 cents per share. Tower Brook then bought the company for $32 a share. That's an increase of 4,676%. Pier 1, most people are familiar with, is another example of a once successful company driven to the brink during the financial crisis. Although the stock was volatile through the 90s and the mid-2000s, the company was a success and shares hit a high above $25 in November of 2003. However, on March 13th of 2009, Pure Imports hit a low of 11 cents a share. Miraculously, the company never did declare bankruptcy. An improving economy and a rising stock market has subsequently sent the stock back near its old highs. Shares currently trade at $20.64, yielding an 18,500% return from the low. Now, I don't know if that's the current price as of today. It's the price when this article was written a little while back. And I'll just hit you with 2 more real quick just to make my point. Not only did the housing market collapse in 2008, but it also pretty much wiped out the auto industry. The bankruptcies of General Motors, Chrysler, Ford, also devastated American axle and manufacturing. The company manufactures driveline and drivetrain systems, blah, blah, blah. On March 6th of 2009, Axle shares closed at 40 cents a share. The company was fortunate to avoid the same fate of many of its customers and managed to stave off a bankruptcy filing. The company has rocketed higher since that point, recording third quarter revenue of $820 million in November, up 16.8% year over year. Investors who took a chance and caught the falling knife in 2009 have enjoyed roughly 5,000% growth. Okay, just hit you with one more. There's a long list, but I'll just hit you with this one more. The story of how BJ's Restaurants went from a penny stock to a company with a market capitalization over $1 billion is one of perseverance and time. As of October 2013, the company owned and operated 143 restaurants with plans to open 3 more by the end of the year. The casual dining establishments are under the names BJ's Restaurant and Brewery, BJ's Restaurant and Brew House, BJ's Pizza and Grill, and just plain old BJ's Grill. On April 30th of 97, the little-known stock closed at just $1. Today it's trading near $30, down from $35. Investors took a flyer on BJRI at $1 and held on, have been richly rewarded as the price has gone up around 28,000% during that time. Okay, Monster Beverage. Who hasn't had one of those? I haven't. Never. Not once. But I know people like them, so I'll give you one more. Recently, merger and acquisition named the company a desirable takeover target with Coke as a possible candidate. Subsequently, shares made a new 52-week high at $70.49 and are currently trading just below that level with an $11.5 billion market cap. Believe it or not, it wasn't that long ago that the shares traded below $1. In fact, on December 29th of 95, that's actually quite a long time ago, 20 years ago, the stock closed at 69 cents and now is up almost 10,000%. This is the dated article. I should have spruced up the prices. Here's the point I want to make. There are, in the stock universe, roughly 8,000 stocks that you can trade, purchase, buy, get options on. etc. Out of the 8,000, how many have you ever actually heard of? How many are a household name? So there's an awful lot of stocks out there doing an awful lot of business, but where do they fall into the grand scheme of things? Now, those of you who've been with the program for a while know that back in December, I did announce my top gold stock pick for 2017. I probably couldn't have picked a worse day to talk about gold than today. But it's the current price of gold, it's like it's nothing but a thing. So in December, when everyone requested the research report, the company was trading at a nickel, and it then went to 15 cents. It's now back around a dime. And that's what's known as a three-bagger. It's still a two-bagger at this point. It doubled in value. It's when a stock goes from a nickel to a dime, it's no different than a stock going from $50 to $100 or $500 to $1,000. The percentage return is the same. Now, all of you who requested that research report back at the end of the year, then the beginning of the year when I talked about it a little bit, you first had to read a disclaimer page that told you, just how dangerous investing in penny stocks can be, that you should only use speculative money, and whatever money you put into a quote-unquote penny stock, and according to Merrill Lynch and other brokerages, anything under $5 is a penny stock. Whatever money you put into it, you've got to be okay if it never moves a penny higher. And you have to have a reasonable expectancy that it could in fact move lower. Okay? This isn't some slam dunk, I got the scoop, I got the inside news. You have to look at these companies the same way you would look at a Fortune 500 company. I mean, out of those 8,000 stocks in the stock universe, 30 made it into the Dow, 500 made it into the S&P. That's 530. Now, if we want to get into the small caps, we can throw in another 2,000 from the Russell. Okay, so that's 2,530. Where's all the rest of them? And what are they doing? And what have they done for you lately? Some of them become day trader darlings. Companies never do much, but for some reason day traders, bite into them and just trade the heck out of them. Sometimes their float gets double. It's traded double in a day. That's when you know there's funny business going on. So anyway, I just brought that up because as we were at an important crossroads back in December, we have now, with my number one pick for 2017, reached another important crossroads, and I'm going to share it with you real quick. Okay? All right. The company Santa Fe is pleased to announce its financials comprising 2 complete years and 3 additional quarters for fiscal 2016 through 17 through its recent third quarter, first quarter calendar of this year, 2017, have been completed and are expected to be released forthwith. Management regrets the unexpected delays which arose for obtuse reasons, as alluded to earlier, with further complications that later unfolded and took great effort and time to resolve. These guys make it so hard. It is unbelievable. I've been through this with a number of companies. It's insane. It really is. And there's some legislation pending that hopefully is going to fix some of that. Now, no matter how many hoops the SEC makes a company jump through, That is no excuse for you to not do your own due diligence, okay? Whatever that means to you. If that means calling the company and talking to the officers, to the CEO, visiting the company, just going on the internet and digging up whatever you can, that's your job as an investor. If you're going to put money into a quote-unquote penny stock, okay? Now, so the financials are coming. When the financials are Edgarized, and if you don't know what that means, just Google it, Edgarized. As soon as the financials are Edgarized, that creates a whole new ball game, a whole new playing field. I'm not sitting here trying to tell you that the stock's going to jump to $9 or go up 23,000%. Far, far from it. I just think that those of you who saw the opportunity back at the beginning of the year and are happy with the action that you took, I just think you need, if you haven't been watching, to be aware, and I think you should read the most recent press release in its entirety. Okay? So, do that. SFEG, read the most recent press release, and then put it in your news feed so that when the financials are released, you'll be able to pull them up and check them out. And for those of you who are new to the show and don't know what I'm talking about, if you would like the, I think it was a 150-page research report that was independently done on the company, which did have a near-death experience, send an email to gold@cfrn.net, and I will send you the voluminous PDF file, and that will kind of bring you up to speed. But then after, because that was done end of last year, you then need to come forward and read all of the press releases. Okay? Now, I own when you get the research report, you'll see the disclaimer that discloses my ownership, much of which I paid for with my hard-earned cash, some of which I was awarded for work that I've done for the company, but it's all there in black and white, okay? And you have my word that before I sell one single share, you'll have a minimum 3-day notice, so that if you need to get out ahead of me, you most certainly can. Okay? We're going to keep this thing above board. And again, you do not put your mortgage money, your car money, the kids' college fund into something like this. Although I think that the current CEO is preparing it to be a very fine takeover target, I have no idea what tomorrow brings. I just know that for 2017, it's where my highest hopes are pinned. And we all know hope is not a good trading strategy. Do your own due diligence. If you have any questions, email them to me, support@cfrn.net. Okay? All right, Michael, you've been patient. I appreciate it. Go right ahead. Come on in. Share the good news. Tell us what happened in the live training room today.
Okay, here we go. All right. Good afternoon, everyone.
Hey, why is it so late?
Why is what so late?
I know. It's because I kept talking. Go ahead. I was just joking.
Okay, here we go. Good afternoon, everyone. Today
you sit and sweat for a while.
I'm actually cold. Today is Monday, the 10th day of July, 2017.
Can't see your screens, buddy.
You should be able to.
Well,
switch.
Some people.
Yeah, it's there.
Oh, why did it come up on my other monitor? Ask the audience. Can you guys see Michael's screens?
You guys can see my screens, right?
I've never seen. I've never seen your screens come up on that monitor before. And I can't get the chat box open, so is everybody saying they can see them?
Most of them.
Okay. Well, as long as they can see them, that's what matters.
Yeah.
I just got to figure out how in the heck that happened. But it doesn't matter as long as I can see them. I'll hit mute.
Okay, here we go. Good afternoon, everyone. Today is Monday, the 10th day of July, 2017. If you have not taken a free trial with us, go to the homepage here at CFRN.net. Right up here at the top, it says sign up for the CFRN Live Training Room. 100% free trial, user indicators, learn our strategy. Click here. When you click there, you'll be brought to this landing page, is what it's called. Just put in your first name, your email address, click on register now. When you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, it's called double opt-in, is so that we do not spam anybody. All right, in the room today, we barely got back to green because we stopped out on a soybean trade right at the end. So
except Morale, we like spamming him, but other than him, we don't like to spam nobody.
Right.
Okay.
We got +8 on the beans, -8 on the euro, +3 on the YM, +2 on the crude, and -8 on gold. Brought us to a whopping $5. It took 25 minutes and 3 trades to get to the goal for the day today, though. Okay, that's the important thing to take out of this, or take away from this. We had to keep going in the room, so we did. So on the month now, we're at 206 1/4. On the year, 19,145. That's over 126 days, averaging 151 per day. Okay, it's early in the month, so we'll get that one fixed up. All right, so let's go through what we did or didn't do today. In gold, we had one stop out right there, and that was pretty much it. Gold's looking like it's going to give a shorting opportunity right here. If you get a down close on this bar, that would be a shorting opportunity. In the euro, we had one stop out right there, and that was all we did with the euro. You can see it was just really choppy. The euro is actually just about to give a long opportunity, but it's not there yet. Okay. Crude oil. Crude oil. Let's see what we got here. We missed a bunch in crude is what we did. We started out, we missed this one right here in the crude. Then we had, where is crude? There it is. A break even there, a +2 there. Then we missed that one, and that one, that one, and that one. All of which were nice trades. And then during the break, we needed to put in a higher swing, and we finally did. And it came back down and started giving shorting opportunities right there. And then it changed directions again. It gave a long opportunity from right here that it's just starting to recover from. And that was it today on crude. Okay. On the soybeans. Come on, soybeans. There we go. On the soybeans, we started out here. We got 4 ticks profit there. We got 8 ticks profit there. And hang on a second.
Muted.
Okay. We got 4 ticks profit there. We got 8 ticks profit there, putting us at +12. We got 4 more ticks there, putting us at +16. Then we stopped out pretty much to the tick right here, and that was pretty close to the end of the day. And I thought we were going to have a red day because of that. After it stopped us out pretty much to the tick, it went up and did what it should have done. Ended up putting in a higher swing. Right now, it's setting up a possible momentum long trade. Okay. The YM is where we got back positive on the day. We had just this one right here. Oops, we had a break even somewhere in there too. Break even over here. And a short right there for 3 ticks profit. Since then, you know, the YM's moved a bit, but the ES has been stuffed in a zone. So on the ES, we had just this one spot right here. All right, and that was it. That was our day today. Our old short that I was telling you about. That's happening right now. Yeah, let's go back to this. If you're gonna read this, you gotta read all the CFTC risk disclosure stuff down at the bottom. +8 on beans, -8 on the euro, +3 on the YM, +2 on crude, -8 on gold. Okay, 206 1/4 so far in the month. and 19,141 so far in the year. That's over 126 days, averaging 151 per contract. And if you had not taken our free trial, go to the homepage at cfrn.net. Right at the very top where it says sign up for the CFRN live training room, 100% free trial. User indicators on our strategy. Click here. You just click there. Fill out this little form. Click register now, and you're good to go. Okay. All right. And that's it. That is it. With that, I can't pass it back out to Studio A, but Dwayne can certainly pull it back out to Studio A. And I mute.
Unmuted.
While I go, Dwayne. Okay, you see, you just turned it back on. Okay.
What's the problem?
I could hear doors opening and closing and did not know where you were going, so I muted your mic. Yeah, so you can have the charts back.
Okay.
You're welcome, Pete. Okay,
So recap of the recap, Mike.
25 minutes, 3 trades, $100 per contract.
So if you'd have been trading 10 contracts, how much would that have been?
That would have been $1,000 per contract.
What about 100?
That would have been $10,000 per contract.
Huh. Most people probably don't trade 100 though.
No, most people probably like to stay around 10.
Yeah. I would say between 10 and 50. I think a lot of guys trade 30, but they're the guys that like take off 10 and then take off 10 and then take off 10.
Yeah. Yes.
That's a lot of what I run into. So.
There we go. I can see your chart now.
You bet you can. Alrighty. Well, since we got the S&P up, last night we had considered, we sent out an alert, as we do to all the concierge clients. If you're not a concierge client and you haven't taken the free trial, you should go to emini.cfrn.net and take said free trial, because then you'll get a taste of something like this. 24, consider buying 24.26. Now, there it is. If you received your email and if you bought 24.26, the market was very kind to you and promptly ran up and put in a swing high just below last week's zone at 24.29 and a quarter. So that's 3.25. Now, the thing that is truly intriguing about the Concierge Trade Alerts is that important prices and important areas are almost always tested. What does that mean? It means that at some point price comes back to visit old 24.26 in this case. And so when that happens, if you haven't gotten your points for the day, you get another shot. Now here we get below the trigger and we don't really rally back up, and so with a stop here, that could have given you a very small stop out. Okay, then it drops way down, picks back up, and this time it's got you up so far 2.75, but it looks like it wants to make a run for that old zone overhead. Okay, on the Concierge Trade Alerts, you get 8 markets every night, 2 trades per market, and as you can see, one trade will often repeat multiple times. Okay, we never risk more than $300 per trade on a Concierge Trade Alert. Very different from what we do in the live training room each day, and I encourage everyone, you need to get your start there. Learn rules-based trading, because When you move into the world of the concierge trades, you are becoming more of a discretionary type trader. And as a discretionary trader, there are very few rules, basically a couple of guidelines. You develop your own rules, okay? But in the live training room every morning where Michael is teaching, there is a reason for everything. When it's time to get long crude oil, it's time for everybody to get long crude oil from Brooklyn to Bangladesh to Bimini, okay? Because the indicators tell you at exactly what price to enter. We never risk more than 8 ticks. And we have a daily goal of $100 per contract. If that's all you ever learn, and you put the 24/20 blueprint to work, and if you are able to increase your number of accounts from your earnings to 20 over a period of 24 months, that becomes pretty substantial earnings. You go, no, wait, it's only $100 a day. Yeah, $100 a day times 20. You can do that math. Where so many folks make their mistake is when they open a futures account and they realize how inexpensive it is to day trade things like the S&P 500 and the Russell and the NASDAQ and the Dow. They just dive in and trade a bunch of contracts, and pretty soon that money kind of evaporates. And so we are so aggressive on risk management, okay? The old saying about, you know, you got to blow up at least a couple of accounts before you can even call yourself a trader. Well, that's very old school, okay? We think that you can call yourself a trader and never blow up an account, never have the psychological damage that comes along with that. However, for that to happen, you've got to be willing to make a commitment to follow the rules, to tie your emotions out back to a tree, to practice patience and discipline, and not veer off the path. Now, some can do that and some can't. About 10% of the trading population, it appears, can do that and also think in probabilities. 90% of the vast trading population have never even heard of that stuff. That's why in the CFRN community, our numbers are quite different, because we actually teach people the things they need to know. Not just a new clever indicator every week and, you know, some new strategy and some new setup. Man, we are doing the same thing that we were doing 4.5 years ago. I sent out an email last night and I said, if it's been a while since you dropped by, drop back in, watch us do the same thing. Why would we still be doing the same thing 4.5 years later? We basically have been doing the same thing for 10 years, but we're doing exactly the same thing for the last 4.5, almost 5. Why would we do that? Well, if it's not broke, why fix it? You know, some people get it in their head that the solution to the trading equation is more points. We don't believe that. We believe more contracts, because there's rarely a day, even though we don't trade it much in the live training room, there's rarely a day you can't take 2 points out of the S&P. And there's enough liquidity that you can trade as many contracts as you want. At 9 a.m. or 9 p.m., at 3 p.m. or 3 a.m. Doesn't matter. The weight's there. Some markets can't be traded overnight. Not well. But again, we start you out in SIM. We put you through a training program where we want you to show us 10 days in a row that you've made $100 per contract You ready for this? In 10 trades or less. See, if you aren't able to make $100 in 10 trades or less, then we know that you need some help, some work. We go into a mentoring session, into the simulator with you, and we help figure out, we take a look at your trades, we inspect them, we go over them with you. We compare what you've done to how the strategy works. And I got to tell you, and I'm going to go ahead and pat us both on the back for the simplicity of the strategy, because at one time Michael and I had more stuff on our screens than airline pilots, and we've trimmed it way back. We went through one piece at a time. Okay, we spent 3 months coding this. Is it making us any money? Nope. Out, out, out. And it's very painful when you've spent day and night with a piece of code trying to get it to do a certain thing, getting it to try and predict the future, which we finally figured out is not possible. To part company with that, it's like sending one of your kids off to boarding school, or worse, to live in a third world country. I don't know. But anyway, that's the process that we went through, process of elimination, until we narrowed it down to the things that actually were making us money. And man, on a clear day you can see forever. So the markets of late have not been uber friendly, but I have no doubt that at some point they will regain the momentum and the equilibrium that we've known for so very many years, and pretty soon we'll be dancing on sunshine again. I mean, we got our points this morning. It was, what was it, 30 minutes, Michael? He's on the phone. Hey, it was 30 minutes was how he reported it. So, if I'm not mistaken. So until that happens, we just grind our way through it. That's all you can do. Because you can't move the market. And to those who are just learning to trade, it's so important that you understand that. Oh, okay, well, I see this and this, so if I put on a trade here, then it'll probably go higher. Why? Why would you putting on an order there make it go higher or lower? The market really doesn't know that any of us exist. It has nothing against us. It's not out to get us. It's just so big and huge. And its pockets are so deep, and it runs so fast, and it thinks so smartly, that the best we can hope for is to just be along for the ride. See, all we need on any one given day. Let me take you to a chart where I can show it to you a little better. Do I have such a chart? Okay, I already did that the whole ugly Russell thing, so we'll just use this chart. Remove, as in get out. Thank you. Oh, I'm gonna have to buy a new computer. I feel it coming. Okay. Let's just slide this down. We won't use the Russell because it's all whacked out because of stuff. Well, I don't know. Actually, I could make a fine example of that, but I'll go to something everybody trades, like Crude. once I spell it right. There you go. Okay. So see, I know those of you that have been around have heard me say it more times than you care to hear me say it. But those of you that are relatively new, maybe today's even your first day on the show, special welcome to you. You might have never heard anyone say this before. This is how markets work. Now, this is the current market. I'm not scrolling back to cherry pick something to try to impress you. I'm just showing you what happened today. From way over here, I guess this goes back to, God, when does this go back to? Today's 7/10. It's July 7th. Okay. So way back to July 7th. What price do? It made a leg and a retracement. A leg and a retracement. Then it put in a big leg. And then it gave us a real nice little kind of warning signal here that it just might be done. But how do we know? Well, what comes after a leg? A retracement. And then another leg. But wait, this leg failed to put in a higher high. When that happens, it means one of two things. The market's going for a deeper retracement, or it's the beginning of a reversal. Okay? How do we know it's the beginning of a reversal? Because we take out this low right here. And as soon as we take out that low and close below it, now instead of leg, retrace, leg, retrace, leg, retrace, leg, now we just flip the picture upside down, because what's happening now is completely different. Leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg, retrace. But just as trees don't grow to the sky, markets don't go to zero. So before this thing falls too terribly far away from the mean, which we call the BVC, it's going to fail to put in a lower low. Okay, so now what does that mean? Well, it means the market is taking a deeper retracement, or it's the beginning of a reversal. Well, wait a minute, we just had a reversal. That's how markets work. Leg, retrace, leg, retrace, leg. We did not get a lower low right there. That's your first warning signal. There's the deeper retracement. And then there's another leg that doesn't put in a lower low. But how do you know for sure? Right here. Now, when you've been around the markets for a while and you've been studying charts, you've got a pretty good idea way before this. But if you're fairly new, and this candle closes here, above that high, leg, retrace, leg, retrace, leg, retrace. See this double top right here? That tells me we're getting ready for a reversal. How will we know when we have a reversal? We'll close below that low. That's how markets work. It's not how crude works. It's how gold works. It's how the S&P works. It's how the Dow works, and the Russell, and soybeans, and live cattle, and you name it. And that's what an auction style market looks like. When there's buyers on the bid Sellers on the ask and prices channeling back and forth. Okay. Now this isn't that whole auction market theory thing that some people teach, which I have nothing against. It's just not something that I use. Okay. Now, what if I took a line and I drew it across here, and I drew it across here, and I drew it across here, and I drew it across here? It's probably not perfectly straight, but do you see that this candle, the body closed below that line? This is like some guy popping his head up out of a foxhole going, hey, hey, where is everybody? And then all of a sudden this rain of bullets comes in and he dives back into the foxhole. Over here, he doesn't stick his head out quite as far. Hey guys, where are you? He can't find any reinforcements, and so he not only dives back into the foxhole, he digs in, right? And now he's moving back towards wherever he came from. Then we go up and we do a repeat in a little bit different fashion. Oh wow, this time we put in a higher high, right? Remember before we couldn't put in a higher high? This high right here closed above it. Oh we're going to the moon again. Well, not so quick. Retrace, leg, retrace, and boom, it's over. Now we're caught up right here. We get a close below this. Get a close below this. What are we looking for? Leg, retrace, leg, retrace, leg, retrace. Until when? Until it doesn't. Until it fails to put in a lower low. That's the warning signal. Okay? That's not the pull the trigger signal. That's the, okay, heads up, head up off the desk. Pay attention. We might have a trade setting up. Now, if this is the first time you've ever seen this, it could be very confusing. That's why we do one-on-one mentoring sessions with all of our partners. And if you're on a trial, you even get one 45-minute one-on-one mentoring session with either myself or Michael during your trial. However, if you're going to have a mentoring session, you must have the indicators installed when we go into the mentoring session. Otherwise, it's kind of a waste of your time and my time if we can't walk through the indicators together so that I can show you how they work. Okay? And you can ask me, well-informed questions. John, is that you?
It is. Yeah, sorry, I know you called and I tried to call you back, but...
oh, that's quite all right. Welcome to the show.
Yeah, thank you. Thanks very much.
Yeah, I did something at the very beginning of the show here. I walked folks through a list of some stocks that were once upon a time penny stocks that have over the years had some very interesting things happen to them. Some of them are household names, others are not. One was Crude Technologies, which ultimately ran up about 34,000%. General Growth Properties, which ultimately ran up about 3,375. True Religion, the $200 blue jean company, they dropped to 67 cents a share and then eventually were bought out by Tower Brook for $32 a share. That's a 4,676% gain. Pier 1 Imports, they hit a low back in 2009 of 11 cents, and then they rallied 18,500%. American Axle and Manufacturing ran 5,000% from their low of 40 cents. BJ's Restaurants went from $1 to $30, or 28,000%. And Monster Beverage, one of my favorites on the list. I don't drink it, but I thought it was cute. The shares were trading as low as 69 cents, and I think they hit a high of 70.49 with $11.5 billion market cap. And I pointed out to everyone that with these incredibly speculative situations, you do an additional level of due diligence. What money you put into it, you have to be okay with the fact that it might never go up another penny, that you might have to be willing to accept that in fact it could go down pennies instead of going higher. That these are very special situations, but as you can see from the list that I read, when you find the right one, the one that stands out, the one that glows in the dark, the one that is head and shoulders above the others based on your own due diligence, then that is where you put whatever it is that you have set aside for those type of high risk, high yield investment scenarios. I then went on to share with them the most recent press release from Santa Fe, that we are simply waiting on the financials to be Edgarized. I told everyone at the beginning of the year, or back in December, we went from at a nickel, we went to 15 cents, we're back at a dime, everybody's still happy. And when these filings hit, it could be another major milestone for the company. And so I felt that I would be remiss if I did not bring it to their attention. However, in order to read the research report that I have, which I think is 150 pages, you have to email me gold@cfrn.net. You must read the disclaimer page before you read the report. It's on page 1. You can't miss it. So, John, how was your weekend?
Not too bad. There was a lot of things happen, which I'm going to comment on in a minute. Just to mention, the 10K actually came out just before the July the 4th, the 2015. 10K on Saturday actually came out, and although it's the 15-year, it's actually up to date, right up to the present.
Has it been Edgarized yet?
Yeah, it has. Yeah, it's out there. It's out there.
Oh, it has been Edgarized.
Go to the website. Yeah, if you go to the website and just click on the link for financials or financial something in the tab, it'll go straight to it. Now, it's been a while. There was quite a bit of drama getting it out, because the problem is when you're doing these things and you're catching up, they require you to, even though it's the 15-year, you have to put in all the relevant information that's happened right up to date. So that filing is valid right up to the 30th of June, right up to the end of the financial year.
Now, what is the name of the act what is the name of the act that is so onerous and so draconian that requires, what's it called? Owsley, Oxley, what's it? Is it Baines-Oxley?
Sarbanes-Oxley.
Yeah, it's just so ridiculous, over the top for a small cap company to have to spend that kind of money and spend shareholder money on that kind of foolishness, when they should be out, doing R&D. In the case of this company, digging, surveying, whatever the case might be. But isn't there some bills in legislation that are going to potentially lift some of the onerous
they're going to repeal. They're actually already doing it.
Are they?
Because we were exploring an easier way to get onto the bulletin board, and we actually could have done it, but we're really going the old-fashioned way, which is the 15 years finished. It's out, and I underscore the fact that the data in there is up to date, right up till the present. The 16-year will be coming out probably in the next day or two. the quarters will come out accordingly. You know, the 15 quarters and the 16 quarters, and then the 3 quarters for the 16 and 17 year, which just finished now. The financial year just finished. Will be for the first 3 quarters will be out fairly soon, and I could probably give you a bit of a hint here. You know, all I can say is do your own, figure it out yourself. But you know, to have bought this company out of where it was, there's probably going to be quite a lot of debt written down, which is really a profit.
Well, there's a $90 million tax break coming.
Well, exactly, and that's a huge, that's a massive plus, especially if the Trump. Can you imagine if the Trump tax cuts come through and you have to pay 15%? You could have a tax free for 6 years on this company, which would be incredibly, put a huge premium on the stock, especially if they're mining high grade gold and silver mines, which is already part of the plan. So it's very, and I think, look, the minute this thing breaks through 10, it already ran up to 12.5 right on the first, on the first 10Q that came out. That was the initial reaction, only because the gold went down a bit since probably a few nervous Nellies were selling, or they didn't even know the financials were out. But as the rollout continues, I wouldn't be surprised if we start going up into the teens, back to 12, 13, 14, and once you get past 15, I think it puts 20 plus back on the radar. And look, we've had a bit of in a way, we've kind of had a slow period in the metals. I don't think we've lost a lot by just having the stock base out here. To use your old theory, the market came back to give everybody a second chance. Didn't get on board the first time. And there's been a very, very good volume. This stock is trading better today than it ever has in its entire life. It's trading more volume. We traded 1.5 million shares last week, and I think over time, as the financials come out, the stock will trade better, and I wouldn't be surprised if we get up to sort of 500,000 a day trading, in the next few months, possibly even higher than that. Now, the good news I have to tell you. Is in spite of the fact that the metals got knocked down rather brutally last week, and it was somewhat of a head scratcher because at the same time we've seen almost limit up moves in the grains. We've seen an absolutely explosive move up in the grains. We have been talking like a parrot about this on this show in anticipation of this for months. I think you'll agree, to be ready for it, and it's come in even better than expected. And look, not so long ago, who's your great grain guy that I was talking with? The analyst? Was it Ed or somebody? It might have been Ed, or it might be somebody else.
Must have been.
Anyway,
Ed. Yeah.
Well, we both said we were going to get a dip in the beans. Probably we didn't think it was going to go down all the way back down to 900, which it did, but it did. And the fact, think about it. We were when Ed and I were talking, and we were saying it was going to go down back into the 9s. We were about where we are today. We were around 1040, and we went all the way down to 9. We've come all the way back. What does that tell you? That is a monumental spike type bottom that probably, at a minimum, has a measured move in the month or two ahead, of an equal amount higher. So we could conceivably go up to about 1,200 on the beans on this run. And I just happened to catch the agricultural show on the weekend, and they were talking about wheat going to $8 or $9. We're at $5 right, $5.50 right now. So that would be a tremendous move. And look, there's a lot of damage. This is how these boom and busts work. You get to a point where it seems nothing can go wrong. You got bumper crops as far as the eye can see, and then all of a sudden something happens. And well, the classic one is people plant too much grain, and that's why the price goes down. So the bigger the bumper crop, the more the price goes down. That's what we've had to deal with. We're doing such an incredible job of feeding the U.S. and feeding the world that the price has gone down to where it is. However, the two things happened. You had this snowfall, this snowstorm that happened in March or April, I forget when it was, but it caused the biggest up spike in red wheat ever. And so there was definite damage done by that storm. And then you had the second big, I remember I said, you got to buy the dips in the wheat because there's another spike coming. That's the way the market works. Next thing you know, now the red wheat is suffering from drought, and in North Dakota and up around the Dakotas, there's potentially tremendous damage to the crop. So and when this happens, it has big consequences. It tends to create bull markets, and it's sort of what we were saying last week or the week before, like how in 2007, when everything was looking dandy in the market, just like we are today, and then a year later the markets were crashing, but commodities were booming. So commodities, having had a bit of a dip, sort of a soft spot a couple of months ago when coffee got beaten down, and all the orange juice and sugar and all these other things got beaten up, a lot of them have come back pretty strongly, and it looks like there's a new commodities boom unfolding. The big head scratcher, the big head scratcher is, excuse me, why is gold not in line with the commodities right now? And part of the reason is look, normally the Fed raising rate is bullish for gold, and it has been. In fact, even today, I think gold is still the number one performing asset since the Fed started raising rates, as we've been saying on this show. And but the real interest rate has apparently gone up quite a bit, and that's the sort of kryptonite to gold. It tends to hurt the gold short term. It's something that maybe over now, and not only that. Look, the bonds have been tanking. They're almost on their lows of the month right now, and the lows of the last couple of months. They look like there's no relief in sight for the bonds. The economy appears to be getting stronger. So there's look at the silver. I mean, actually last night we called the lows around 3 a.m. in the morning, and at that time we didn't know that this flash crash that happened on Thursday apparently has been negated by the CME. They wiped it out as if it doesn't exist. You can see all the charts are corrected.
On silver?
Yeah. And that's an interesting dynamic, because that sort of fortifies the fact that the bottom is in. If the flash crash supposedly went down to 1430, and then the CME says it didn't happen, I mean, what does that tell you? That's sort of a classic bottom of the market stuff. You know what I mean? It really is. It's sort of like the CME raising margins on silver at $50, per ounce to fight the Hunt brothers, or to because the market got too high and out of control, or maybe too many people are short and going to get put in bankruptcy.
Since June 26, bonds have dropped from 157 all the way down to where we're at now, 150, 127.
Exactly, and as
that's
you
a
said,
$6,000 per contract drop.
Right, and remember the surprise in your voice when I told you my target's 145.
Yeah.
I mean, we're not that far away from 145 the way we're going.
No, we're not.
And by the way, yeah, and look, so we've had. I said last night, expect. It's very hard to do this because when the market's getting pummeled, you just can't see a sharp rebound coming. But I could see from the silver, because I did a lot of work on it the weekend. If you look at the silver chart, monthly or weekly, and you see the tremendous liftoff, very bullish liftoff that we had from the bottom in 2015-16, and then we took off for the first 3 quarters, and it from 14 all the way to 21 plus, and then we've pulled back in two distinct waves. We've had a three-wave pullback, and that appears to be over. What that tells me is the next up move is going to be meteoric. It's going to be spectacular. And look at the market today. Look at what's happening already. we said at 3 o'clock in the morning, we put out an alert saying, expect a vigorous rebound in the silver and gold from here. And, we were down at 1205 or somewhere like that in the, and at the time, and we were down at around 1520 on the silver. And here we are at 1570 almost already, which is tremendous. We're up 50 cents off the lows. This is a very big deal. The gold stocks are soaring. We got a major buy on the gold stocks this morning. In fact, I said on Friday that probably the dust and the J-dust were a sell and the gold stocks were a buy. The dust are tanking right now. The gold stocks are soaring. This is the thing that bottoms are made of, because this is what happened in 2016. The market ran away, and if you weren't on board, you can never catch. You were going to miss it. So the whole scenario is changing with gold. And another thing that happened over the weekend was the silver is now in deficit for the first time in decades. In other words, we are in a we are in a lack of supply situation. We're not meeting demand for silver from mining, from recycling, from everything. The demand of solar and all these promised things that are going to happen have finally overtaken the supply. So the demand has flipped over to positive, and that's probably going to continue for a while, because there's an article over the weekend about how China is going to go into solar like you can't even imagine. It's just going to be exponential, because they're trying to get rid of all these coal-fired power stations and everything, and they're going to go more and more solar. I guess as time goes on, the solar is getting cheaper. So that's another thing. And then the third component is that technically here we're the more extreme the bottom, the most important thing is we start getting back to 1224. If we get back to 1250, I mean, I would almost say that I guarantee that the bottom is in, because you've got such a massive rebound type spike in the market. And remember, I said when I came out with my big buy a while back, and the report that I'm probably going to put out right away now, because I didn't want to really put the report out until I saw the turn in the metals. But I did say some time ago, it might take until September to get back to the 18 level on the silver, right? Well, if we get back to 18 by September, guess what? We're repeating the deja vu of 2010, when we were at 18, and I came out around mid-September and said the market could go to $50 by the second quarter of 2011. We got there by May the 1st. The same thing, something similar could happen this time around, where we could go up possibly quickly, or over the longer term to 50, maybe back off a bit, and then get the energy to go up through the 50 in the same way that the market broke up through the S&P highs. When the S&P highs were holding it back, and the so going through 50 for the silver is like the Nasdaq going through 5,000, right? We couldn't get through 5,000, the double top. But when we finally got through it the third time, look at where we are today. We're almost at 6,000 now. So that's probably what's going to happen to silver over the next few years. And of course, any gold stocks, especially juniors that are emerging, are going to become extremely valuable. This is sort of one of those times when stocks can go from literally from cents to dollars, and there will be a mania sooner or later. There's going to be a mania for gold, You can bet the farm on that. I think there's going to be a mania for gold and silver. We're actually overdue for a real mania, a multi-year mania where that's going to kick in, and all the ducks are lined up for that to happen because the dollar's in the downtrend. The mines are not producing anymore. The gold is peaked. It's in a deficit. The silver's in a deficit, and so the value of the dollar and the amount, and the grades are going down. So everything is getting more difficult in terms of producing gold and silver, and that's ultimately very bullish for the long time. And then the third thing is you got all this, strife on around the world, including North Korea and Iran, which are, probably helpful to the silver and gold value down the road. And you've got this constant monetization, which has been going on since 1900, where the value of the dollar has fallen from like 98 cents to a few cents today. So all of the elements are in place over the next 7 years. And you've got central bank demand. I mean, you've got the Russians and the Chinese buying record amounts of gold and silver, and so we're at an inflection. We're at a potential inflection point right here that could have just monumentally bullish consequences over the coming months ahead. One other thing, and this is very interesting. When the flash crash happened, I was thinking back to the previous flash crash, which was the stock market. And interestingly enough, the stock market, as you will know, bottomed on March the 6th, 2009. And the flash crash occurred, I think it was May 10th of 2010. So it was about for 1.4 months later. It was, won't say, almost 1.5 months later. Sorry, 1.5 years later, excuse me. And guess what? The silver bottoming, you extrapolate out the same, and this flash crash in the silver that now didn't happen apparently, is very similar to the flash crash that happened in stocks. Guess where we were on the S&P when that flash crash happened? We were at 105, 110, and we're at 240 today. So, looking at the silver, looking at the gold, for example, if you take that as being similar to the S&P, and we're at 1,200 today, that would project gold to about 3,000, within the next 5 years or so, which is what I'm advocating at a minimum. So that it's all that is sort of an interesting, analysis that you only heard here first, and as you've heard quite a lot of things here first recently, including what we talked about a while ago about traveling to Mars is just a non-starter. It's never going to happen in our lifetime, that's for sure, unless it's a suicide mission. Listen, on a couple of interesting things over the weekend. Did you know there was a tremendous cold spell swept down through Texas on the weekend?
No, Ed's the only person I know in Texas that I can think of offhand, and we only talk every other Thursday. Well,
look, it dropped. It was amazing. It was like a winter. It got down to really low temperatures, and it made me think of what happened a few days earlier, which is Squaw Valley, which is right next to Nevada and California, there in Reno and Incline Village. I have a friend in Incline Village, and he was skiing on July the 4th, and they did this thing on CBS, and the guy who runs Squaw Valley was interviewed, and he said that we basically got 2.5 winters in one winter last year. They had 80 feet of snow. 60 feet of snow, 800 inches of snow, more than 800 inches of snow. They had about 60 feet of snow right out, around his house for the whole year, and they've got 4 feet of snow on the ground already today, and we're already on the way back to winter. So, and I've got a friend in Alberta, and he's in northern Alberta, and he's saying that the ground hasn't unfrozen this year, and a lot of the crops are not, there's a 30% crop loss, and it's very difficult to grow stuff, and it's been notably colder. I'm telling you, as sure as night follows day, this ice age is coming, and we're seeing the beginning of it in the last year or so with the amount of snowfall. You had record snowfall in just about in every state, and it's never happened before. And people are saying, these guys they've never seen anything like it. The amount of snow that fell last year. So, if we get another snowfall like that this winter, we get another 2.5 winters in one winter. That's a really big deal, and it just absolutely squashes all this nonsense about global warming. I know we're having some heat waves at the moment, but this is a symptom of the global warming. Right before the ice age comes, you get a kind of a heat, the last gasp of heat before the winter sets in, and that could be what we're experiencing right now. Supposedly we're 3 or 4 years away from the ice age actually beginning, but it's definitely. The evidence is quite strong and quite supporting, and actually, for the last few years, the ice cap around Greenland has been actually increasing. Look, they can go to the Antarctic and find some place where the ice has gone lower because that's what they do to try to support their failing arguments. But in a lot of other places, the situation is very different, and you're seeing it in your own country. It's there. We had a very cold winter. We had a tremendous amount of snow. And the winters were brutal in Europe. They were incredibly brutal. Some of the coldest winters they've had, in the last 100 years. So, I think it just supports and I'm not sure if I sent you that thing. I don't think I did yet, but I was trying to get it ready for tomorrow to show. This sun cycle. It's just like a bull market. It peaked out in 2000. That's when Al Gore came out of the woodwork with the whole climate change thing to start with, right at the top of the market. Then the heat went down, and then they had a secondary rally in 2014, and that was the Paris Agreement. And now we're in a downtrend, into potentially a possible ice age. So the argument is pretty strong that all of this is classic sort of top of the market stuff. And all this reaction, and it might be interesting over the next few years. If we get a really brutal winter next winter, I think Trump's case is being proven. So, the other thing related to Trump over the weekend is this guy. This guy Carter Page.
Mm-hmm. Yes.
Well, he may have the last laugh. He's nobody's fool. This guy. He's a PhD, and he gave an interview of all places on Smirconish on the weekend, and I would recommend people go and watch it because he's a pretty cut and dried guy. He doesn't fool. He doesn't beat around the bush. This guy. I kind of find him pretty credible, and he said unequivocally. He said this intel report that was put out on January the 6th about this Russian hacking, which originally was supposed to be 17 agencies, has been corrected to 4, so it's getting weaker all the time, is basically phony. It was a total false report that was put out there to jam. Remember, Trump was the president-elect on January the 6th, so this is all Obama stuff. The whole thing was Obama. And if you remember, Trump, it all came to my head this weekend as to why Trump's reacted this way. Trump is, he calls a spade, and if he really doesn't believe, he's got his doubts about things, it's because that's the way he is. He calls it like it is. And he's not going to mold his opinion just for the benefit of trying to suck up to the Europeans or to anybody else for that matter. And thank God we have somebody who's willing to stick to the truth. So he was sitting down at these so-called intelligence briefings, and he didn't really, they were criticizing him because he was questioning them and not sitting and listening like regular presidents, right?
Right.
And also, I don't think he had any confidence, or very little confidence, in the people who were delivering those briefings, especially if one of them was James Clapper, because frankly, who could sit down in a room with that guy and believe anything he said? I mean, they dragged this guy out every 5 minutes and put him on different shows, and he's got Clinton and Obama tattooed on his forehead. And if you don't understand that and all the crap that he comes out with, I mean, you're not getting the memo. That's plain and simple. And it's the same with Hagen and all these fellows. They're all rotten to the core. They're all they're called the deep state deadbeats. That's what I'd call them, the deep state deadbeats. And they're rotten to the core, and they've been pushing out all this nonsense. It's an absolute disgrace what's going on. And this whole concocted thing with the Democrats, they drag out this guy's Schiff every 5 minutes, and the same thing with the Brits. Oh no, we'd never do that. I mean, it all, and what was interesting about what Carter Page said. He said all this is going to come out. He says slowly but surely, all the lies and all these falsehoods are going to come out, and that's going to be the real scandal. And these people are perpetuating this Russia enemies thing because it involves hundreds of thousands, if not millions, of jobs that really should be concentrating on ISIS. And these people are fighting the last war. They're fighting the last war. They're fighting the Cold War, which ended years ago. And they should be concentrating on the real enemy today, which is ISIS, North Korea, Iran. There's plenty of enemies around the world other than Russia. So I think their jobs are secure. They just need to be fighting the right war, not the wrong war. And if they'd been doing their jobs properly back in 2012, when ISIS popped up and nobody noticed and nobody did anything about it, a lot of people would be alive today instead of dead and maimed the way they are. And that's the biggest disgrace of all. That's where Obama and Hillary have blood on their hands, and they continue to have blood on their hands every day because of these maniacs who are allowed to run free all over Iraq and all over the Middle East and Europe and Asia and everywhere else. And I mean, it's an absolute scourge on humanity. It's the worst possible thing that could have ever happened in the world. And thank God we're finally getting it under control. But that's the real story, that there's been a dereliction of duty by somebody, most probably Obama and all the way down, because they didn't go after ISIS and snuff this thing out when they should have. And I hope that, I'm pretty sure that from now on, anything that pops its head up anew is going to be dealt with very swiftly, because you can't give these people an inch. You can't, and hopefully all their garbage is going to be taken down off the internet sooner or later, which has to happen as well. So, hopefully that's the way of the future. Just going to the market for a minute. I think we said pretty strongly that we were looking for a very powerful week upwards in the market this week. We had a bit of a brief test early this morning, and then the market took off. The FANGs are on fire. We were very bullish on the FANGs right from the lows. We put a buyout on the FANGs at the virtual lows of last week. The drug stocks are a little bit weaker today. They're not performing yet, but I would look to try and buy the drug stocks in somewhere in these low making areas right now today over the next few days, because when they turn, it's going to be like the FANGs. And the FANGs, look at Amazon. We're just about to go back up through 1,000. We're at 998.75 right now. And as I said a week or two ago, when these things start hitting new all-time highs, they're going to go parabolic. And look at the market now; it's accelerating higher. This is very, very bullish, and it should continue for most of this week. And it just shows you that the real, as we said, generally G20s are very bullish for markets. Obviously, you get the people talking about 19 plus 1. Well, if it's 19 plus 1, it's because Trump stood out, and they'll make all these excuses about what a terrible G20 it was and all the rest of it.
He really did do a good job, didn't he?
He did. He did it. Look, when you get did you see the tweet from Trump, the letter from Bob Dole? I mean, listen, when you start winning over people like Bob Dole is like, the royalty, Republican royalty in the sense, he's a war hero, and he's a guy who's nobody, he's been there all along. He's a real elder, Republican elder. And he wrote an incredible letter of praise for Trump, saying it was a speech for the ages. Newt Gingrich said the same. And funny enough, one of these shows yesterday, I think it was on CNN, it was probably with Fareed, and they had Elliot Abrams. And Abrams had been a bit negative about Trump the last few times I saw him. And all of a sudden he starts, somebody's criticizing Trump for saying this or that. And Elliot Abrams suddenly said, no, that's not correct at all. This is the real story on Trump. And he gave Trump a huge endorsement yesterday, and you could see everybody who was listening to him, they were sort of dumbfounded, saying how they were trying to sort of muffle him because he's on CNN. I mean, it's just such a pack of garbage. It really is. And then there's another gruffy old guy who used to be a lawyer for Bush, and I don't know what's eating him, but he's like the most rabid anti-Trump guy, who was going on and calling it treasonous, what Trump Jr. did last night. It's just such a pack of nonsense. But I think that my honest feeling is that
Trump Jr., you're talking about this discussion over what was said with the Russian attorney?
Yeah, I mean, look, to be fair, if somebody coaxed them into a meeting by saying, we got evidence that the Russians are funding the Democrats, I mean, that's a pretty big deal. If you're a competing party, and you hear that the other party is doing something like that, that's a pretty good way to get a meeting or to get their attention. You know what I mean?
Yeah.
And so I mean, you can't be forgiven for you can't be accused of doing something wrong by just hearing the facts or to find out about it. As it turns out, it amounted to nothing. But that was the ruse that they used, presumably, to get the meeting. So I mean, they did it in a way that implied that the Democrats were doing something wrong. So that would be in everybody's duty to find that out, including the competitor. So I think that he's pretty much off the hook. And listen, this Russian thing is dying. It's probably going to run out of gas in a few weeks or a month's time, and I think it'll be dead and buried after that. Because people, there's a limit to how much people can stomach. After a while, it just becomes a boring story. And CNN's ratings are testimony to that, because they're in the tank now. They're not even, people aren't watching it anymore because they've kind of overdone it. They've overshot, and probably the same thing happening with MSNBC. And not only that, look, the more important thing is what the real poll today is the transports hitting new all-time highs again. And I think the Dow is about to, and the S&P is on its way to. So what we were saying last week is maybe by the end of this week, the market will be hitting multiple new all-time highs. If things were so bad at the G20, the market would be going in reverse, and that's not happening. So as long as this market keeps going higher, Trump's get stronger. Look at the. He started when Trump came into office. He had 15 million followers on Twitter. He's got about nearly 40 million followers now. Actually, he's got 40. He's nearly got 60 million followers on Twitter. Actually, just on Twitter alone, and he's got about 50 million followers on Instagram and Facebook. So he's actually potentially one of the most highly followed people in the world now, 110 million. And are those people following because they don't want to hear about him, or why are they following? Because they're starting to like him. They're starting to want to know what he's saying. So many of those may be new votes for Trump. And as long as he doesn't do anything really stupid in the next, if he starts to kind of tone it down a bit or just keep on the straight and narrow from now on.
Yeah,
And look,
we can only hope.
He handled himself. He handled himself very well with Putin, as well as could be expected, and probably better than expected. And same with the Chinese guy. But there's some ways. I think the interesting thing is that the Chinese Achilles heel has not yet been exploited, and they have a pretty big Achilles heel, and that Achilles heel is the Japanese. The Chinese are scared of the Japanese because of World War II. Remember, the Japanese invaded China in 1937 and occupied, and they did horrendous things, and there's a lot of bad blood between the Chinese and the Japanese. But if you really want to motivate Xi into doing something, you just have to, exercise the Japanese factor and start talking about nuclear, putting nuclear arms in Japan. And I think the Chinese would pretty much do anything right away. So, and they're including getting rid of this maniac in North Korea. So that's really, and look, ultimately, the Japanese were a formidable fighting force in World War II. Nobody wants to restart that. Nobody wants to, get that up and running again. But if this fellow in North Korea keeps doing this, that's going to happen. These Japanese are going to say, that's enough, and enough is enough. And they're going to go in and take this fellow out themselves. I mean, I'm telling you, that's really the way to solve this problem, is to use the Japanese threat, in my view.
Well, I think you're right. You're right. The show of force that the U.S. and South Korea put on for North Korea, do you think it had any effect? Does it even register with this guy?
No, it doesn't. And look, as I think I said on the show already, the other Achilles heel is the Chinese don't want nukes on the Korean Peninsula.
I mean, Trump could whisper in the ear of one of his generals, and by the time he's seated for dinner tonight, the general could be whispering back in his ear, there is no more North Korea. Doesn't North Korea understand that?
Absolutely. Well, no, they don't, and the reason why, what the U.S. has to
they should get the internet.
Well, they have to look. You have to fight fire with overwhelming fire, and while we've got all the assets, in submarines and a long way away, they're not in your face. They're not in the face. The biggest threat to South Korea and the U.S. is the armaments on the DMZ. The artillery and the rocket launchers and that sort of thing. And it's a sort of a game of time, because if North Korea did launch a preemptive strike, unless the U.S. are absolutely ready and waiting 24/7, which they probably are, but you can't say for sure. They could suffer quite a lot of damage before they finally get to neutralize those all that's arrayed against them. One way to really change the equation is to massively increase the armaments along the border, with even to the extent of putting tactical nuclear weapons. Because if you say to the enemy, if you even fire a single shot, you're going to be neutralized. You're going to be vaporized overnight. I don't think anybody's going to pull the trigger except by accident. So that, and more importantly, I think that would take Kim to the negotiation table very quickly, and he'd have to admit defeat, because if you've got a massive nuclear armament arrayed against you right on your border, I think there's not much you can do. You can't start a war, that's for sure, because you're going to be annihilated overnight. You have to neutralize that. This is the most dangerous array of defense ever mounted by a country, and it has to be neutralized instantaneously. That's the key to this thing. They can't even let them off to get a shot. And if we did have to go in preemptively, you'd have the ability to neutralize that force, before they even get a shot off. And that's exactly what Trump was saying, defanging North Korea. That's what you need to do to defang the North Korea. You have to be, listen, this ain't no game. It's all out. You cannot, you have to be, the minute war starts in North Korea, there's only one answer to it, and that's total annihilation. I'm not saying, listen, it's actually a benefit, because you get rid of the troops, you save the people, right? If you eliminate the threat on the border, you basically take 90% of the North Korean threat out of the picture right away. You basically gotten rid of half the army, or most of it, and that's who you want to get. You want to get the army, not the people.
Yeah, that's true. That's very
you
true.
can't. This thing can't be. It can't be a conventional war, because the consequences are. It's just the same argument for what happened in Japan. They could have lost 1 million men going in and taking over Japan conventionally. Japan weren't getting the memo. They weren't going to admit defeat. They weren't going to surrender. It took what it took to make them surrender. And it's the same thing with this guy Kim. He's not going to surrender. It's going to take something really, really monumental to get this guy to surrender.
So much weird stuff has gone on in that country. I listened to a thing on NPR one time. They interviewed a really famous actress and actor from South Korea, and the new guy in North Korea, his father, had them kidnapped and brought to North Korea, where he kept them in his house like pets. He would bring them out at high profile political parties, and everyone knew who they were because they were very famous movie stars, and so they were told to be polite to the guests, and to have conversations and discussions with them, and they would sing and blah blah blah, and then at the end of the party they would be put back in their rooms. I mean, it was crazy. But they finally, after about 4 or 5 years, gained his trust, and he was so proud that he owned them that he allowed them to travel out of the country to do a show somewhere. And they made a mad dash for some embassy and asked for asylum, and they got it.
I seem to remember that.
They were a husband and wife team, and so they had divorced, but then they went through this 4 or 5 year ordeal together in North Korea. So once they escaped the embassy, they kind of got back together. And if I'm not mistaken, one of them's still alive, because I heard this not too long ago. One of them has passed and one is still alive. I think it might be she's the one that's still alive. For the life of me, I can't think of their names.
It's creepy. It's creepy.
It is beyond creepy. When she got out, she wrote a tell-all book about the whole thing. That's how the world knows what happened.
Uh-huh.
Yeah.
Oh, it's terrible. By the way,
John, there was a question typed in for you early on, and Angie, I apologize that I have not asked the question for you, but I didn't quite understand it. It says TEII exporting 16 BJ or BLJ project complete 2022 plus GAZP.MN question mark. Thanks, John. Does that do you understand that at all?
No, I don't.
No, I typed in a question mark. Angie, if you could type that in again, perhaps. It might be a language barrier thing. I don't know. I'm more than happy to ask if you can just rephrase it for me.
Yeah. A couple of things just to note before I sign off.
Okay.
The energy is creeping back up. If we get another inventory drawdown this week, I think that's going to put the oil back up towards $50. The soybeans just dipped 1040, 1040 and a half, 1045 short while ago. It's coming off a bit now, just back below 1040. The one thing you have to be a little bit careful of when you get up to this level is rainfall can tend to cause these things to come back pretty sharply. You could also get a retest of the 1,000 level on the beans, so it could get very volatile here. The other thing is the coffee, which actually pulled back this morning to 127.10, has rebounded to 129.20, and looks very. Remember what I said? You've got to kind of be long or have a long bias on the coffee, because if we get a cold snap in Brazil, you could see coffee limit up tomorrow morning. The way we closed today sort of suggests that we might be ready to break out into the 130s on the coffee in a pretty big way. We also, on the cotton, which ran up with the grains, we did put a sell stop up around 68, 60 or somewhere like that, and it's dropped down a full point today since. And also the cocoa, which we sold near the highs recently, has also come back pretty dramatically. While the coffee has rallied, that's not unusual. Also, the sugar has pulled back a little bit. So some of these commodities are kind of moderating today a little bit, while the orange juice is stuck sort of mid-range between 130 and 140 right now. I still tend to be a buyer on the orange juice if it starts breaking out into the upper quadrant. The gold is acting fantastic. All the gold stocks are acting extremely well today, and very symptomatic of the fact that most likely a major low is in place here, or is in the making right now on the metals. And if we see, given that usually when you get a very big day like this on the nugget, on the upside, and the JNUG, it usually means there's going to be an overnight up move in the metals tonight, and we'll probably gap higher in the gold stocks tomorrow. Not necessarily. This is the first day up, so we might get a little bit of a pullback first. If we do get a bit of a pullback, that would be good, because it'll probably present another buying opportunity. But seeing as what happened a few times when we've seen these bottoms recently, we've had 3, 4, 5 days in a row just straight up in the metals, and it feels to me like something similar is on the cards right now. So, listen, great show. Thank you very much for the invite.
Thank you very much. As always, we appreciate having you with us, and we look forward to chatting with you again tomorrow.
Thanks a lot. Have a great afternoon. Bye.
Good afternoon. Bye-bye.
Good afternoon. Bye-bye.
Okay, so those financials have been Edgarized, and they are current up to today. For those of you that understand what that means, then bully for you. And if you don't, go Google it up. Google up importance of public company financials being up to date. What is Edgarizing? Those kinds of things, so that you understand the importance of it. And the fact that they reached back 16 years is just, that's Sarbanes-Oxley. So many small cap public companies literally went out of business because they could not create shareholder value, because they were spending 50, 60, 70% of their budget every year on accountants. There's nothing left over to build a company with. Pay employees. Create benefits. R&D. Why don't they go after the crooks and leave honest people alone? I don't get it, but I guess I'm not supposed to. It's 44.25 down to a low at 43.65. 44.25. That would be 60. All right. That's what I come up with. So that's $600 per contract available. We never get out at the swing high or the swing low because we trail our stop. Okay. And something like this, where you got to put your stop here, unless you can go to a 5-minute chart and find a better entry, you just got to walk away. Because you get 9 trades a day, 9 markets, 2 trades per market. That's 18. And if none of them followed the rule of important prices, important areas are almost always tested, you got 18 possibilities. They start testing themselves and it becomes astronomical. And you only need 1 good trade a day. So all right, so we've covered everything but the Russell, and I don't think we can really cover the Russell because, well, no, I guess we can. I mean, that's what the Russell looks like because it's in a state of transition. The new symbol, the old symbol is RLMU, the new symbol is RTYU, and very splotchy first day of trading, but there was some trading. Let's see, there's 304 contracts, 164. These are 30-minute candles. But by the end of the week, all the volume, 80 to 100,000 contracts, will be shifted to this new symbol RTYU7. And before the CME, can do anything like change the point value, that ICE contract has to be completely closed out so that all Russell is in-house at the CME. And then at that point, they could, do whatever they want to do. And I've made calls and I've researched, and I don't think they've decided what they're going to do. Okay, Angie, I just saw what you typed in, but I'm so sorry. I just don't. I'm sorry that I'm not able to interpret that. I can see that you're trying really hard. So, my apologies. All right, on the new Russell symbol last night, RTYU7, we were looking to be buyers at 14.15. This won't have a lot of relevance until all the volume moves over, but yeah, we'll get a feel for it. By 14.15. Swing high, 14.19, so that's $200. Although I'm sure the spread between the bid and the ask was large, so I don't think it's something anybody would have been trading. But if you did, and you did well, congratulations. Sell side was 1411. See how non-existent there was anything in there. But that is 1411. Yeah. And the swing low was 1403.70, so if we roll it up to 1404, it'll be 8. No, it'll be 7. So it'd be $350 per contract available. Let's see, I'm already liking it, even though it's not fully developed. I like it. I like it. Okay, good word for the day. What have you been complaining about? Huh? Huh? You know you've been complaining. I got news for you. It doesn't help. Not only doesn't help, it actually makes things worse. 1 Thessalonians 5:18 encourages us, in everything give thanks. The Bible has basically one thing to say. My notepad has something else to say. Bible is basically one thing to say about complaining, and that is, don't do it. Nothing deep, nothing mysterious, just don't do it. You say, well, if you had my problems, you'd be complaining too. That's how you feel. Read on. Philippians 2:14 says, do all things without complaining. Now, there are reasons why. Number one, complaining usually makes things worse. The cycle goes like this. You have a problem, so you complain and stay stuck. You feel bad, so you complain even more and end up with stress. But I don't know. That doesn't sound like a solution to me. Number two, complaining won't get you where you need to go. Instead of committing the situation to God, you're actually doubting His wisdom and provision. Thousands of Israelites died in the wilderness for doing exactly that. Paul writes, do not grumble as some did and were killed. These things were written down as warnings for us. 1 Corinthians 10:10 and 11. When you overlook your blessings and dwell on your problems, you not only lose your joy, but you kill everybody else's joy around you. And then pretty soon nobody wants to hang out with you. Now you're really miserable. And number three, complaining can actually lead to stress-related illnesses. I guess they say heart disease is the number one killer in America, but, I think gets followed by cancer. I don't know, but both of those, I think, can be brought on by stress. Think about it. A calm and undisturbed mind and heart are the life and health of the body. That's Proverbs 14:30. Be honest. How many calm and undisturbed complainers do you know? Instead of complaining, start counting your blessings. Author Barbara Johnson gives us this tongue-in-cheek example. A hand-lettered sign nailed to a telephone pole read, "Lost. Three-legged dog, blind in left eye, missing top of right ear, recently castrated, answers to the name of Lucky." As a redeemed child of God, luck has nothing to do with it when you and I are blessed. So pray for Lucky, and your good word for today is in everything. Not necessarily for everything, but in everything. Give thanks, for this is the will of God for you. True story. Now, if you have not taken our free trial, or if it's been 6 months since you took the free trial, or if you just want to come hang out this week, you can do two things. You can email support@cfrn.net, or you can call 949-423-6464, or you can just go to apply.cfrn.net. apply.cfrn.net. Okay? If you do that, you'll be with us tomorrow morning, 9:30 a.m. Eastern, in the live training room. You'll get two emails. One, a computer-generated email, and you must click the confirmation link, which will then notify Michael and I, and we will manually send you a lengthy email, which shows you how to get prepared for tomorrow, what to expect, how to be ready, so that you don't waste a day out of your 5-day trial. We want you to make the very most of it. During your trial, you'll also have an opportunity to do a one-on-one mentoring session with either myself or Michael. Okay? Anything you ever wanted to know about Emini Futures, or anything you ever want to know about trading, and you never had anybody you could ask, well, here you go. You'll have one of us, you'll have our undivided attention for a full 45 minutes. Okay? We'll train you in the live training room 2 hours a day for 5 days, let you use our tools, our indicators, our strategy, so that you can determine if our 90-day mentoring program is what's right for you. Oh, I don't need 90 days, man. I'll just go in that trial and I'll see what they're doing, and then shoot, I'll go do that. And when all my money's gone, I'll come back and ask them if maybe I could wash their cars. No, come on. You got to get a good education. Because of the low barrier to entry in futures trading, something in our 2-watt brains, but see, that has a high barrier to entry. You not only got to have the money, you got to have the financial background and a lot. I mean, they really look into you because you're going to be representing them. Okay? So remember that. A low barrier to entry means it's practically impossible to do unless you have a good education. That's where we come in. There's a high barrier to entry. Part of that money you're paying is for the education you're going to get on how to run the business. See? Most of the fly-by-nights, you know, they got a $99 set of indicators and 2 PDFs of instructions. And as a special bonus, 10 things your broker never wants you to know. See ya. Got to move the server to another offshore island. Come on. We've all fallen for that stuff way too many times. And I guarantee you somebody in this audience is going to go fall for it today just because I brought it up. I'm sorry I brought it up. I'm going to run. It's been a great Monday, as Mondays go. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Hello and welcome to the Mind of a Trader. This is Steve Croft. Isn't it interesting that if you ask most people about what it takes to become successful, the answers that we get usually come from, well, only those that are real wealthy are the ones that become successful, or maybe those